Good morning, everybody. I'm Donnie DeLange, and I'm going to take you through the main highlights of MTN's year-end results. MTN seems fairly valued on an absolute basis, trading at a forward PE of around 21.5 times, which is well ahead of its 5-year average. However, margins are on a depressed base, and the group plans to optimize their investment portfolio, which should support the medium-term margin recovery. MTN recently changed its management team and have highlighted its bright strategy focused on improving operational efficiencies, strengthening the brand, as well as growing market share. Management expect the continued execution of the strategy to drive higher service revenue, EBITDA growth, and an improved free cash flow, which together with a moderation of capital intensity will support the 10 to 20% dividend guidance over the medium term. The share price is underpinned by a forward dividend yield of 4.3%. However, geopolitical risk and foreign exchange volatility, as well as repatriation, will remain risks to the group's dividend sustainability. Changing regulations also poses a significant risk for the group, given increased pressure on pricing and subscriber registrations. Then the telecom space remains highly competitive, which highlights the need for development and innovation, as well as affordable product offerings. The group's leading position in underpenetrated markets and the intensive focus on data and digital services should support the group's performance over the medium term, and revenue from alternative sources such as value-added services, mobile money, and e-commerce are expected to further support top-line growth. So just highlighting some key financial points of the results. Just important to note that the results are reported on a constant currency basis. The group achieved 6.8% top-line growth, driven by strong data revenue growth, improving customer service, as well as strengthening competitive position. The group's service revenue was up by 7.2%, supported by growth in Nigeria and South Africa. Strong growth in data and digital revenue were the main drivers behind this growth in service revenue. The EBITDA was up by 2.5% to around about 47 billion rand, although impacted by the 6.6% decline in Nigeria's EBITDA. The EBITDA margin contracted by 1.4 percentage point to 34%, and their net finance cost rose by 6.8%, impacted by a 10.1% increase in net debt, as well as lower cash generated from operations. Then the adjusted headline earnings per share, which excludes non-operating items, was down by 15% to 6.65 Rand per share. The MTN declared a final dividend of 4.50 Rand, bringing the full year dividend to 7 Rand per share, which is in line with the previous year. And then CapEx amounted to 31.5 billion Rand, representing 23.7% of revenue. CapEx was focused on investing to improve the network. Portfolio exposure of up to 4.56%. So just before I end off, if you wish to place a trade, you can please contact the trading desk. Investors are reminded that they can refer to the research tab on the PSG Wealth Trading platform to view the more in-depth company analysis. And please look out for our next trade idea on the group, which should follow the release of its half-year results towards the month of August. And investors can also refer to the filter tab under the research section for a live relative valuation on the group in the interim. And also please note the following disclaimer. Thank you very much and enjoy the rest of your day.